Good morning. Good morning, everyone. It is Labor Day. It is Labor Day, and the public markets are closed. The stocks are not trading, at least they shouldn't be. The options markets, I believe, to be closed. The banks closed, certainly. The bond market is closed, and the futures are open. Light trading, don't expect there to be a whole heck of a lot of anything, but the banks don't want to leave. They do not want to leave their portfolios and their bread at risk. So they can always come in and hedge anything they need to in the futures market. I don't know the exact holiday hours. My guess is that it's going to shut down at probably 1 p.m. Eastern Standard Time and then open right back up at 6 p.m. and we'll be off and running. We are running five micro contracts. Five. We had a high water mark of about $500 or $600 last night, actually carried through to this morning, and some of the chop back and forth, we gave that back up. But that's no problem. We're going to try not to make any decision off of the money. We're going to try and let the program do its thing. I'm Bag of Dawn. This is Stock Market Caddy. We invite you to visit our website and let us know if you have any questions. Thanks. Good afternoon, everyone. And it appears the markets are still open. Obviously, very, very quiet. And the only people looking at the markets on a day like today are the real sickos. They're sick, and I include myself to be one of them. That's about it. Everyone else is having hot dogs and hamburgers and saying goodbye to the summer. And for us, we're thrilled. Okay. Um, our summers are like our winter season. We're like kind of like nice to see. It's starting to cool off ever so slightly, but we still got to get through September and October for storm wise. But in any case, we hope you had a wonderful summer and hope you're ready for the fall. The volatility is going to be back in spades, we believe. We've seen some wonderful trades here, and by the way, I'm Bagger Don. This is Stock Market Caddy, CADDIE.com. And I think we get some copycats, but that's okay. What do they say? The best form of flattery is somebody who copies you. But but we're the original StockMarketCaddy.com, and more valuable than any one program is really all of it, right? It's all of it. And we're doing things that nobody else is doing. Let's just take a look at gold for a minute, right? Let's just zero in gold and silver, all right? So what I'm going to do is I'm going to change the gold contract here to an hourly signal. Now, I can't backdate this, right? I can't. It is what it is, right? There's no trickery here. It is what it is. So, 141 hours ago at 11 a.m. on August 22nd, right, just a few days ago, if you got this signal at 34.19 and you bought yourself a mini gold contract, you're up 12,650. That's what it is. Now, if you bought a micro, it's $1,200. Still not bad. If you had done it with options, you could be up much, much more. You could be. There's any number of ways to what you could have done, which we do review in Q School when we get there. If you had bought 10, yeah, be 126,000. You know what? I'm okay buying gold, right? I like buying gold, and but what about well, I don't, but Don, but 141 hours ago, there could have been some bad signals on gold. They could have whipsawed me, and I could have lost $2,000, $3,000. Yeah, you could have, right? I don't think you would have lost that much, but it's possible, right? Because and that's why when you get the trend, you want to stay with the trend. Because Swing Machine, when he doesn't get the trend, he's going to kick out. But if he gets you the trend and then you start overthinking it, or you got yourself in trouble and you're like, I got to get that money, well then, you might as well not even have Swing Machine, because you're trading the money. But let's put silver on a hourly. Let's do that right here. 69 hours ago, 12 grand. 12 grand. At 39.21. Now we've been bullish silver like since the underneath 25. Because there is something called the gold to silver ratio, and it's like way behind. And so we're bullish gold, but we've been saying, buy silver, keep buying silver. And it's all going higher. Now, I'm not saying that you're not going to get pullbacks, but it is all going higher. Absolutely going higher. In our view, absolutely is a strong word. In our view, it's going higher. But let's look at it on a daily. I don't want to be an hourly trader, Don. I got my IRA account. I want to know. Well, all right. So you're sitting on all this cash that seems to be eroding in value. But let's put it on a daily. Let's do this. Let's go through this. Again, I can't. It is what it is, folks. This isn't a circus act. So it was actually interestingly enough, 6 days ago. So it happens to coincide just about, the hourly and the daily. And then let's go here. That can happen. It can. But check out silver. 71 days ago. Now, we definitely have members that have done this. Now, I don't know how much leverage they put on it, but I know that they did it. And they also bought SLV, which is an ETF, which no leverage. 35 grand in 71 days. All right, so let's go to gold on a weekly. For the weekly and now we're getting into the swing trader, the investor. We're getting into the investor area. Check that out. 95 weeks ago. 95 weeks ago. And I know for a fact that we have members that have this. I know it. They have. I don't know the depth of their commitment, but I know they have this trade on. One mini contract is $126,000 in 95 weeks. Now, if you had put on 10 minis, you got 1.2 million. You'd have to roll them, right? Let's put silver on a weekly. 78 weeks ago. 78 weeks ago. 66 grand. Isn't that crazy? And then, of course, let's go to the monthly. Let's put it on a monthly. Now, this is going to be, this is for the person who just wants to know where to stash their money. Well, let's put it in. 34 months ago, on December 30th of 2022, 133 grand. Or if they put it in, it's a 60% increase from the entry price to where we are. And of course, if it's leverage, you're gonna be nailing it. Leverage is kind of, they do it on the lottery tickets, right? You can get it like double play, a triple play, stuff like that, right? Do not use those ETFs though. Those leverage ETFs, those are sucker plays. Though that's not a good way to do it. I would use futures. They're designed to eat your money. Very bad instruments. ETFs are okay, singular, but the doubles and the triples, in particular the quadruples, they're a sucker's game. Don't play them. And silver, 19 months ago. 19 months ago. So that's not that long ago, right? Here they are, 27.85. We were definitely, because we were talking, silver underneath 25. There's 69,000 one silver contract. 10 of those, you got $700,000 in your account. You can go buy yourself, I don't know. It is what it is. Folks, we can provide you the education. We can provide you the tools. I'm not going to, day in and day out, we're pointing out opportunities, but it is learn to trade your game here. I'm not going to, because see, I don't know your risk parameters, and I'm not a broker. I'm not a financial advisor. So I'm not going to get out over my skis. Now, there are people to do that, and if you want people to do that, that's okay. Go find them, do your due diligence, but that isn't us. We're about teaching and mentoring those folks that want to make their own decisions. But, you need patience. You need the discipline. It needs to be something you want to do. And, it is what it is, right? I know it's a bit maddening. There was another gentleman I was listening, I sent the video to, and he's been around a long time. I think his name was Marks, Oak Tree Capital or something he's talking about. And he says that it really is a simple game, but not easy. And I get that. It's like golf. Golf is really a very simple game. Very simple. Hit the ball, put the ball in the hole. It's just that it's not easy. It isn't. And when now you can get very, very good at golf, right? Now to be at Tiger's level, that's insanity, right? That's, God-given talent, um, but you can get very, very good at it, and still have and really, really be able to enjoy the game. You can. But if golf is a source of frustration, you throw your clubs, you hate it, you get out there and, it's just miserable. Um, if that's the way you are when it comes to investing or trading, you really got to kind of stop, splash some water on your face, take a look in the mirror and make a decision. I'll be the first one. There's a lot of ways to make money in the world. I'm not telling you that you should do this or you shouldn't. I'm not going to do that anyways. I'm not. Um, I'm just saying, whatever it is you're doing, I hope it's something you really, really enjoy. Because if you do, um, you'll have the passion, the discipline to get you over the dry spots or the frustrations. And that can be in anything, right? Prior to doing all this, I used to be in surgery with surgeons day in and day out. I didn't touch patients, but I really, really enjoyed the challenge. It was a mental challenge as well. And as long as I did, if I was squeamish about blood or didn't like it or didn't like the smells, didn't like doing it. So I really did enjoy it. Fortunately, they paid me a lot of money to do it, so that didn't hurt. Um, but and it's a confidence level. I don't know where they are today with all the COVID restrictions and everything, but surgeons don't. And I literally, had their cell phone numbers. They had mine. Um, I had carte blanche to, come into the surgical suite of any number of surgeons. They're not going to let any Yahoo do that, right? It's not not going to happen. Um, we approached our trading as if it was surgery. It isn't surgery, but we approached it that way. And so we're very serious about what we're doing here. So if you want to go out and listen to, a bunch of yahoos and Peter Schiff is finally riding high, and I know he's a gold bull and he's, and I like listening to him, but it's been a while. But here, when you look at Swing Machine, I mean, if you had been a member and you simply programmed it and you waited, that money would be in your account. And I know for a fact, I'm not going to disclose who they are, but we have quite a few members that are in it. The question is, what are you doing? So I'm going to put this back to a 5 minute. Why do we show these smaller time frames? We show the smaller time frames because as you're beginning, you're using leverage products, we can't take the risk out, but we can try to mitigate the risk and see the likelihood that you would have got into a gold contract and be up 150 grand or whatever it showed is probably and you're not trained, is probably slim and none, because the moment and it could have been an investment, right? Maybe you heard somebody talk about, hey, I got to get long gold. So you got long gold, and it should have been an investment, or you thought it was an investment. And then what do? It's as soon as you're up $5,000, you take it off. I can tell you this. I have a family member, gonna respect her privacy, but I told her about gold and silver. Right now, they're not traders, right? They're not. They're investors. And And she did it. She called her broker, said, put X number into gold and X number into silver. Oh, I don't know you got to do that. The stock market is doing this. I don't know. This is the broker. She told me about it. I don't know. It's AI. It's, crypto. Just do it. Okay. Now, silver's gone from, and she's in below 25, is at 41, 40. And what's he doing? He's calling now. Maybe you want to sell some of it. Oh, okay. Never sell the stock, but now want to sell, gold and silver. They're beauties, right? I say this. I know what you listen to, and I just, I chuckle because, and my family member I love dearly knows it too. It's comical, you know. All these brokers, they're all nice people. I get it. They're all boutique. They're all got, oh yeah, And when you go in their office, they got a plaque on the wall, or they got, on their desk, they were a fighter pilot and everything else. Nothing against fighter pilots, and they got the inside scoop. Whatever. I don't have any of them. I don't have any of them. I have Swing Machine. I have all these tools. I can see dozens of ways to see what silver and gold are doing, what crypto is doing, what the S&P is doing on any interval. And as an annual member, you get everything I got. And you get weeks worth of instruction up front to decide, whether or not this is what you, really want to do or not. But this isn't. I would not. I would. I'm going to say this. I wouldn't join Stock Market Caddy as an annual member if you're, you got some sort of like a 6 month horizon. Like I'm going to do it, and I got to get it done by 6 months, or you come at this like, okay, it's going to cost me so much money, and then I'm going to have to make so much to be able to pay for that. I wouldn't do it. I really wouldn't. If you don't see the value in getting control over your own financial destiny beyond a year, and you don't see the value in having all of the tools over an extended period of time, then you probably shouldn't do it. You probably should, call one of those boutique brokers and tell them, look, here's a bunch of money, and throw it in, throw it up against the wall, and throw it in there. I don't know. I mean, but I wouldn't look at it that way. I really wouldn't. And we have, just so that folks know, I know initially, we're not inexpensive. We think there's great value. I get it. But you got to understand, we're spending very good quality time with you, and also saving you a tremendous amount of time. We have members now that have been with us for years. Do you know what their annual cost is as an annual member? $1,750. That's their effective cost. $1,750. $1,750 a year. Now, they're still a monthly member, so you can tack that on, but that's the annual cost. How many trades is that? Like 2 or 3? Two or three trades. Our membership is very well thought out. We're going to spend a lot of time with persons up front, and we want them to make the best decision for them. And then over time, we're trying to increase the value and reduce the cost. And that's what provides the longevity and gives also the growth, I guess the growth curve, you might call it, for Stock Market Caddy, because we are at our most robust membership ever since we've been doing this, both at a monthly level and an annual level. We have the most members that we've ever had. We're growing steadily. Just it's a beautiful thing. Now, you don't see and hear from a lot because, quite frankly, we don't either because they're just doing their thing, right? I won't after your Q school and you become an annual member. It's not like I'm not gonna be like I'm available, but I'm not calling you like, hey, how was your trading last week? Okay, did you buy so? I'm not gonna do that. You don't want that. That's not what we. That's not who we are. That's not what we wanted ever to do. We just wanted to provide folks the startup, the insight, and then they could take it and run it, mix and match, do their own thing, and have at it. I love hearing from folks, and we do. We'll get notes, and they'll say, "Don, we're in the gold, we're in the silver. God, it's phenomenal." That sort of thing. So, I think it's going to be at 1 o'clock. I think the market is going to shut down, so we'll let you watch up until then, and then the market will be closed, and then it'll open at 6 p.m. and September is underway. hmm September is notoriously or is usually the weakest month of the year, and there's a reason for that. The hedge funds, their fiscal year ends, I think, in October. Most of them October 15th, October 30th. So a lot of them want to book their profits. But the fact that we got all through the summer, I don't know if that's going to be the case here. Usually it starts in August. We see it. Swing Machine is still. Let me just show you. Let's do this. Let's put the VIX on a daily, and so it's still trending down. It's still down, and that indicates as 77 days ago. And then put the S&P on a daily, and so 81 days ago, it's long, and it's still long. It's come back to the mean. It was up here, but it's come back. There's 38 grand in that trade. 40 grand. If you had done this with options for 90 days, I mean, you made a shitload of money, kids. If you know how to do it. And then let's look at the NASDAQ. Let's just go put that on a daily. And the NASDAQ has been long for 84 days, and it is dipping. It is. And it led up. So there is a little bit of like, well, why is the NASDAQ doing that? But it's not yet in a downtrend. But it led on the way up. The fact that it's starting to lead on the way down. And then the Russell came in kind of late. Let me show you. Here's the daily on the Russell. It was 78 days. There's 12 grand on the Russell. So what happens is the market runs and runs and runs and nobody get in, and then they're like, wow, we can't keep bidding up the NASDAQ. So there's a dash for trash, and they go to the small caps. So we're thinking that isn't a bullish sign, that it's really kind of end stage bubble kind of thing. But I'm not telling you it's going to be like this month. It could be. It could be. My instincts tell me, my previous instincts, I think you should be looking. Again, we can have pullbacks, very significant pullbacks, and you still make a ton of money on the dark side if you have some sort of a discipline and some sort of our tools to help manage that for you. But boy, I got to tell you, I think by March of next year, I don't know, man. Um, I would be beware once again, beware the Ides of March. But let's throw this back and put this back on a five, put this back on a five, and just let you know we're ready when you are. But just make sure that we have a spot for you, because I think you've all know now we have a limited number of licenses we'll issue each year. And let's see, we got them all set up here. And when they're full, and then we have to wait until next year. We wish you the best. Reach out anytime. Okay, folks, we're just 3 or 4 minutes from the market. I'm fairly certain it closes at 1. We'll stop and check. If it doesn't, we'll let you watch. But I'm fairly certain it does, and we'll need to shut down if that's the case. And just remember that as you're doing this sort of thing, remember when last night we were up 5 or 600, and I made a decision to keep running, right? So you get to make that decision when you turn the robot on, when you turn it off, and how often you want it to run. If you set out each week and you say, hey, you know what, I'm okay with making, $500 this week. So if you turn the robot on and you make your money in a couple of hours, then turn it off and go do something else with the rest of your week. And go do it again the next week. And the week after that, and the week after that, and the week after that. Now, sometimes it may be in a few hours. Sometimes it may be 2 or 3 days. And sometimes you may not, right? You may actually lose 500 by the time it's over. But generally, you're going to have an opportunity to quit early. Do you have the patience? Do you have the discipline to do that? It's really, it's not hard. It really isn't. Once you're aware that time in the market is a risk factor, and the sooner you learn to control your greed and your fears and your emotions, you know what? It's going to help you in everything else. Trust me, there were surgical cases that if I gave it too much thought, I couldn't have gone into the room, open heart cases and so forth. But I was trained, and that was my job. Thanks for stopping by, folks. We'll see you at 1 o'clock. If they continue trading, we'll let them run. If not, which I think they're going to shut down, we'll have to shut YouTube down. Thanks.